If you go back to 1971, James Rickards would say gold should be $94,000 right now, measured against gold. The one thing about having gold and silver in your hand is it is an asset that has no counterparty liability. And if you do it before the masses figure it out, like the way the central banks started doing this 5 years ago, 6 years ago, 7 years ago, and then the others being the sovereign wealth funds, and the commercial banks, these are people at the highest level. So yeah, I would say it's everything, and the best laid plans need to be revaluated, and this is the time to do so.
Gold's actual value is far beyond its current market price. It's the ultimate hedge against a collapsing system built on debt, leverage, and illusion. While the mainstream media remains silent, the world's most informed institutions, central banks, sovereign wealth funds, and major commercial banks are quietly repositioning themselves. They're not speculating, they're preparing. Over 40 central banks have repatriated their gold from Western vaults, including the Bank of England and the New York Fed, signaling a historic shift in trust. The exodus from paper to physical assets marks the early phase of a new financial order, one where real metal, not promises, defines power. Andy Schectman, a leading voice in the precious metals industry, warns that these moves aren't random, they're strategic. Massive deliveries on COMEX and global metal shortages are clear signs of stress in the paper markets. Insiders are accumulating quietly, while the public remains distracted. Now, we present the clips from Andy Schectman's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Of course, we've seen it with almost 40 central banks repatriating their gold from the Bank of England and the New York Federal Reserve. Early adoption into backwardation right now. We see problems of getting the metal. Sorry, there's an 8-week delivery delay, folks. We have a shortage of manpower and trucks in London, we were told. Or, not really a good example, but gets the point across. Venezuela says to the Bank of England, can we please have our gold back? No, you can't. And when you see 40 countries pull their gold home from the Bank of England and New York Fed, they were there because for many years you had the Western rule of law and stable, liquid, efficient markets, the COMEX and the LBMA. They don't care. And you're seeing exchanges, the Shanghai Metals Exchange and their expansion in multi-jurisdictional expansion, one being built right now in Saudi Arabia, one just completed in Hong Kong, which allows you to take metal off of the exchange through Hong Kong and receive it directly by trading yuan into it. The people who are doing this are the central banks, and they are the most well-informed traders on the planet. That's number one. Now it's moving to the commercial banks who are telling their institutional-sized clients, early adoption is everything. And this is why most people fail at investing, because they move rather than trusting their intuition and listening to the rants of a guy like me. What the hell do I know? Or Alistair, what do we all know? Well, we've been right. And we have been right. By hook or crook, we've been right. We were laughed at. And you look at an environment where Wall Street refuses to acknowledge it. But now they are at the highest level. But they don't tell you, yeah, we've been wrong. We laughed at all of you guys who wanted to buy gold and silver, yet it's outpaced the 10-year Treasury 2-to-1, doubled it. It's beaten the S&P 500 with dividends reinvested for 25 years, which, by the way, no one ever does. No one ever does reinvest all their dividends. But we are living in an environment of negative real rates, and you could argue yield suppression, where they're trying to keep the yield down best they can. Monetization of assets. And this has pushed investors for a long time into risk assets, which have inflated valuations, like all the Mag 7. And it's hiding the risk. And that risk hiding, well, the insiders know. Why do you think they're leaving? As the public's chasing that FOMO. This isn't free market pricing at all. And the assumptions of return are off. You can't make these assumptions in this environment. And I think, to Alistair's point, the one thing about having gold and silver in your hand is it is an asset that has no counterparty liability. And if you do it before the masses figure it out, like the way the central banks started doing this 5 years ago, 6 years ago, 7 years ago, and then the others being the sovereign wealth funds, and the commercial banks. These are people at the highest level. So yeah, I would say it's everything. And to Alistair's point of the ETFs being expensive, yeah, you're paying BlackRock and JP Morgan a 60 basis point management fee to, in essence, use your metal to drive the price down. There's an 81 million share short position in SLV right now. And what the hell is that? It's just, as Ed Steer says, it's grotesque. And it is. This drives the price down. It allows them to pull metal off elsewhere. But, you're paying them a 60 basis point management fee. You can store in one of our Brinks facilities for a fraction of that. Real stuff, which you can never take possession of SLV or GLD. It is expensive. But through all of this, and even this month where we've seen a big fallback of 10%, 58,639 contracts taken off. Multiply that times 100, you got 586,000 ounces of gold. No, 5,863,900 ounces of gold taken off the exchange, and multiply that times 4,000. So you're talking an awful lot of money worth of gold coming off just this month, but it's been that way every month since November. So what's the takeaway? Well, the takeaway is this. Starting in 2017 or 17, the central banks started buying and repatriating their gold. And then it proceeded to be the family offices, the hedge funds, the sovereign wealth funds. Now it's the commercial banks are telling us this. And at the same time, but that excluded the New York traders all this time until November of this year. And now every month you're seeing deliveries like this of millions of ounces of gold and silver every single month, billions of dollars worth every single month. And again, call it reverse psychology, use it contrarianism, that's a word. Why isn't anyone talking about this on the mainstream? Why do you not hear about the record deliveries? Who's taking billions upon billions upon billions? I mean, keep on going, billions upon billions every single month. Who's doing it? Who's bleeding dry the LBMA? Why is there no talk of this? It is because the lack of journalistic integrity or effort on their behalf to tell anyone what's truly happening, including the people who are trying to decide which way to invest, is ridiculous. And it's just like this pullback that we've seen, right? The mainstream media is all over it. And a lot of the things they said are valid. A lot of them are. It was overbought. It had gone up for 9 straight weeks. It had blown through moving averages. It was in need of a correction. They capitalize on all of that, and then they'll put a cap on and say maybe it's topped and it's over, just like in 2011 and 1980 before that. But what they fail to mention, which invalidates all of it, is that, the snowball that was pushed down the hill to start this going happened in the access market when New York was closed, when there were no markets open before Asia opened, when no trader, Alistair will tell you, that trader would be fired and shot, and not in that order. Any trader that would dump billions upon billions upon billions upon billions of gold and silver at the most illiquid time of the evening, when New York is not open, no traders there to catch that, all you're doing is triggering sell stops that drive the price way down. You are guaranteeing the worst settlement. And then, of course, who did I mention? Bank of America and Morgan Stanley? Well, Michael Lynch says they came right in and scooped up physical, shows the numbers, and silver went right up. So this is all a game that is being done for maximizing the effect, the fear. And there is not one rational trader on the planet that would do that, would dump it in the access market. They would dump it over hours or days, slowly bleeding it into the system, not telling these traders how much they want to sell, slowly, so that the demand would be commensurate with the supply. But they failed to tell you that. They should have said all of these things are true, but they dumped it. They dumped it when there was no market open. So everything they say is invalidated. And all the sell stops that triggered, freaking everyone out, getting all what's going on with gold, what's going on with silver. They never called when gold was going up for 9 straight weeks in a row. And I think the powers that be understood we were entering a period of time where the public was waking up. That's a bad thing when you have a wicked short position. It was damage control, it was short covering, it was fugazi. And you'll see it right back up, I promise you, before the music stops. If this had been done the right way, slowly bled out over days and weeks in New York trading, I'd be less confident. But any idiot, stupid idiot that would dump it like that when there's no traders, well, that invalidates everything that the media said, no matter how rational and logical and valid those statements may be otherwise. That's just my 2 cents.
Well, I actually want to just pick up on an earlier point you were making, Andy. The largest mine in the world is COMEX, because this year so far it's delivered around about 1,200 tons. That's three times China's total gold mining effort, annual effort.
There you go. And who is it? And why don't we hear who it is?
Well, that's for us to guess, isn't it?
The global financial structure is unraveling under the weight of its own contradictions. Trust, the cornerstone of every fiat system, is rapidly eroding, not just in currencies, but in the institutions that manage them. Governments, drowning in debt, can no longer afford genuine market discipline. Instead, they resort to inflation, yield suppression, and financial repression to delay the inevitable. Bonds, once considered risk-free, are now guaranteed losers in real terms, while fiat money itself is behaving like a melting asset. As confidence collapses, liquidity is drying up, and capital is quietly flowing toward tangible stores of value. Central banks, sovereign funds, and large institutions are already moving, exchanging paper promises for physical metal. The cycle is entering its terminal stage, marked by inflation, intervention, currency decline, and a rush to hard assets. Those who understand this sequence are preparing now, not reacting later. Let's get back to the interview.
You can't trust a regulator that's also the world's largest debtor. Just because the government backs their industry, the bond market, doesn't mean that bonds are safe. And I would argue the U.S. government won't default. They'll just inflate or suppress yields. But either way, you hold bonds, you lose. And the institutions, they'll bleed real value while the system all along pretends all is well, as they have and as they continue to do, as the dollar is losing massive value against gold. And I think that all of this stuff is connected, right? The risk that we find, to me, it all boils down to the currency and the confidence in the currency, which is the glue. You lose that, and the whole thing comes apart. And I think that that's really the most important part of all, is that the rehypothecated collateral and the counterparty exposure, all these things are fragile, but the biggest risk that people are ignoring is that fiat money is losing trust. The dollar is losing trust. The bond market is losing trust. And you get a sharp bond sell-off or liquidity freeze that Alistair talks about. It not only would it wreck balance sheets that look solid, like in pensions and insurance companies, long duration holdings, mark-to-market losses, redemption pressure. All of this would break them. And, everyone says, give me my money. It's like the laws that we had talked about, done again, of breaking the buck and the gating that they have subsequently changed to. They can just impose huge redemption fees. The point of it is that this whole thing is based upon an illusion. And yeah, as Alistair says, absolutely shorten duration and add real assets. Hold physical gold. Stay liquid. Forget yield chasing. It's a trap. And diversification is broken. It's a broken correlation in this world. 60-40 is dead. Diversity by risk, not by asset class. Own things that survive inflation. And fiat decay. It's easy. All that's precious metals. And yes, gold and silver are essential. Physical custody, essential. It's insurance. It's not a trade. And that's what I think too many people think of. It's not a trade. You're buying it to get out of the way of what's coming. So Liquidity is security, and I would take a lower yield right now with gold or no yield and sleep well at night. That's my 2 cents on that. You can't keep suppressing a market when the world is pushing back against you. The only way to do so is to push it in the direction that it is going. And as I've said on your show for 5 years now, that the biggest money in the world is wise to suppressing. When you see 8 Western banks holding the largest concentrated short position on 1,000 commodities traded on the COMEX, and that being in silver for years in a row, it's not too hard to see it if you look, that it is certainly a collusion of the West for reasons. And you could argue gold for Gibson's paradox, the inverse relationship between real interest rates and the price of gold. And I would argue silver for the military-industrial complex, the need to make high-tech weapons, the need for massive amounts of silver to do so. And we've talked about that ad nauseum. I don't need to go into that, but the world is wise to us. And this is why you see coordination between countries that are sophisticated and motivated and wealthy now and understand what we're doing and using it against us by standing for delivery. In fact, probably shorting it themselves to do so. That's why China, the largest producer of gold and second largest producer of silver in the world, are actually taking the time to fly to Latin America to buy gold and silver directly from the miners, like Sean Kunkun, Dolly Varden, who told me this, and paying double what the West will, and sending it back for refining when they're already producing more than anyone in the world. Why would they do that if it means nothing? They see the big picture. That will end. And in terms of the way that the sequence goes on the bigger picture, we're seeing inflation spiking, I think. I mean, they're giving up to it. It's at 3%. It's much higher, which we said it's 11, really, if you ask John Williams. And they're going to pour more gasoline on the fire right now, even though they're 50% away from their target. To Alistair's point, this would lead to bond losses. To Alistair's point, again, this would lead to central banks panicking, doing yield curve control, suppressing interest rates, which leads to currency declines. And if the currency is declining already in a period of time where no one trusts the institutions and the markets really anymore, because we have weaponized the treasury against countries like Iran and Russia, yet we've been in Iraq for 22 years under false pretenses, destroyed their country, toppled their regime, and we're still there occupying their country. How is that fair? Now, I'm not making any judgment on Iraq or on the Ukraine or Russia war, but how is it that we can tell Russia, well, you know what, we're going to take your treasuries that you have stored with us and we're going to confiscate it, in essence, default on them, and we're going to give it to, largely in the form of weapons, to the Ukraine. And that's okay, but we go into Iraq for faulty reasons, and we're still there 22 years later, and we've just decimated the country. So when you talk about trust, there is none any longer. We are not trusted. That's why U.S. Treasury holdings are down to their lowest level ever, like 39%. Across the board. And so as it goes from inflation to bond losses to the panic of yield curve control or suppression of interest rates to your currency declining along with no trust, you get a flight to hard assets. And isn't that what we're seeing right now with the acquiescence of the big commercial banks to tell their institutional clients, you better get 20% of your assets in gold now? And I think people and institutions need to front run that sequence, period. And it's really not hard to see that. I think for me, my assumption that I make is that you build a policy assuming inflation and currency risk is real. And we've lived, this is a problem, all of us in the West have lived in a world where bonds were risk-free. They're not. And that currency was permanent. It's not, right? My father, first year out of college, married my mother, and $6,000 a year starting salary at Helene Curtis Cosmetic Company way back when was enough for him and my mom to live comfortably on $500 a month, comfortably, in 1963. And I said, there's no way, Dad. Yeah, look it up. The average salary was 10 grand that year, 9 or 10 grand. So out of college, first job, okay. All of this stuff is not permanent. And this was during a time when the United States and London, UK, were revered, were thought of as the bastions of honesty and integrity and free market enterprise, and they're not. And now we have policy that is coming in that is frightening the world through sanctions and tariffs masquerading as tariffs that are actually sanctions, and fiscal irresponsibility to the nth degree, where we create $1 trillion of debt in 71 days, right? $1 trillion sections ago was 31,688 years ago. We can create $1 trillion of debt in 71 days. And we bring on a company or a group like Doge, who finds $2 trillion in things that could be cut, but Congress can't agree to more than $200 billion. That's about 38 hours of spending by the U.S. government. So if you assume that inflation and currency debasement, what are they calling it right now? The debasement trade. Oh, really? They're just getting on that? So if you assume that currency and inflation risk are real, and that bonds are not risk-free, and that the dollars you hold are not permanent, in fact, they act more like a melting ice cube, then you'll be better off and understand the reasons to hold gold and silver, not to become wealthy. You might if you own enough, but because it is wealth, that the smartest money in the world is telling you through their actions they agree. The most well-informed money in the world is telling you they agree. Take it for what it is. Don't take my advice. Look at what the big money is doing, and you'll see that they're leaving the equity markets and they're moving to tangible commodities in their own possession. And that is the truth.
The global economy is standing at a critical juncture where illusion meets reality. The debt-fueled prosperity of the past decades is fading, replaced by the cold truth that paper assets cannot outlast the loss of trust in money itself. Inflation isn't a policy mistake, it's a strategy to manage insolvency. Every new dollar created devalues the savings of those who still believe the system can sustain itself. But beneath the noise, something powerful is unfolding, a global migration from promises to proof, from credit to collateral, from paper to metal. This transition won't be announced, it will be realized suddenly, as capital flees from what's easy to print toward what's impossible to replicate. The wealth that survives this era will belong to those who saw through the illusion early and acted while they still could. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.